All right, we're live. So welcome back to Dapp University. So today we're going to talk about a lot in this video. And one of the first things I want to address is something that I'm sure, everybody's been thinking about this past weekend, which is what just happened to the crypto markets. Okay, maybe you were checked out doing something else this weekend. Maybe you checked your phone this morning, coming into work, whatever it is, and you're like, whoa, what happened? So we're going to talk about that in this video. Are we going to go into a bear market? What do I think is going to happen next? What am I personally doing? All right, we're going to talk about that. We're going to look at a lot of other news updates that have happened in this space since our live stream we did on Friday. Again, we do these live streams Monday through Friday on this channel about this time. Just turn on notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying this in videos is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them. Like, I'm never going to give you my phone number on YouTube or ask you to invest with me. Never going to DM you on a social network and try to get you to join some sketchy, private chat group where I ask you to invest money. It's just never going to happen. So anyways, we got people jumping in the chat here. We got Code Chap, David Stone, Automatic Beats, Benjamin, ENIAC, Camille, Robert, Wendy, Daniel. Welcome. All right. So let's go ahead and jump into this. Talk about crypto markets. What happened over this past weekend, okay? So let me just pull up the price charts. Some of them aren't actually loading very, very well. But I'll tell you how I found out about this, right? So this was Saturday night in the United States. And I was, winding down my week, getting, ready to fall asleep. And I literally just out of the blue, just checked my phone. I was like, okay, I wonder what's just happening. It's sort of like the habit of just, scrolling through every possible app that you use all the time right before you go to bed. It's like one of the worst things you can possibly do for your sleep health. But anyways, I did it. And I just opened CoinGecko and saw this massive candle from basically, $4,600 all the way down to $3,600 on Ether. I was like, what just happened? So I basically got out of bed, got to my computer, was checking all this data. I was checking what's happening with the news. I was checking what's happening. Everything's like, why did this just happen? So, there, as always, whenever we see big price swings in crypto like this, there's always multiple factors. But I'm talking about one of the biggest factors that is to blame for this massive move right here, which is a huge leverage blow up, okay? So leverage has been, the crypto markets have been really frothy because people have been, using excessive leverage as of late. All right, this happens a lot. If you go look at, the crypto markets over this past, year or so, and you see these big booms and busts along the way, right? These massive dips, those tend to coincide with leverage blowups. So what happens is basically you have people who are taking crypto, going to an exchange that offers leverage trading products where they'll say, hey, we're going to let you trade on 10x leverage, which basically means if you have $1,000 of Bitcoin or something like that, you're going to lock up $1,000 of Bitcoin, and then we're going to give you back 9 Bitcoins, and you're at 10x exposure, okay? So basically what happens is, if the price falls by 10%, though, you get liquidated, or you start getting liquidated, right? And if it falls far enough, you're just wiped out completely. Okay. So this happens, and people just take on excess leverage, and then it can cause a cascading effect when you see these big price movements. All right. People get liquidated, wiped out. And then you see these big booms, and busts that result in something that very similar to what we just saw on Saturday. So I saw that, just from my perspective, just telling you what I'm doing on this. So what did I do whenever this happened? Well, I had been thinking about potentially allocating more to crypto, just because I think that there's a lot more upside for the market over the next year, within the next year time frame. Okay, we'll talk about that more in a minute. But I actually bought more. Okay, so I bought more at about $3,700 per Ether. I just got lucky enough to wake up and check my phone where this happened and kind of buy right at the bottom of that range. Okay, so that's personally what I did. I'm not necessarily saying this is financial advice for you. Okay, my plan is basically to watch this. I bought it about with about half of what I planned to allocate to crypto, and then dollar cost average the rest as we see what's going to happen next over the next, 7 to 14 days, something like that. Because sometimes whenever you see these kind of blow ups like this, you see this and then everybody thinks they're out of the woods when it starts to recover, and then it's not very convincing and it kind of just bounces, and then, you might even go lower than this. So we might see a price lower than about $3,600, $3,700, kind of where I bought in. So that's why I'm just kind of, holding a little bit of cash on the sidelines and trying to dollar cost average in, which basically means you buy a little bit over time to basically mitigate the risk that you're wrong. So, how do I see the markets playing out from here? So basically, I think about it's about probability. Nobody knows for sure, but my long-term thesis is basically that we're seeing more and more adoption of blockchain technology, particularly around Ethereum. It's one of the reasons I'm so bullish on it. And as you see that adoption, basically that value accrues to the cryptocurrencies themselves. Okay, so I don't see that adoption slowing anytime soon, and so for that reason, I don't foresee the uptrend in price appreciation for Ether really slowing down anytime soon or breaking the overall trend. Okay, so but what does that mean in the short term? So in the short term, it could mean that we go lower from here. Okay, that's why I'm saying I have some sort of dry powder on the side to try to get more if we end up going lower. Okay, because we've seen that happen in the past. All right, but from about that $4,000 level, what do I think is the potential downside? The potential downside risk is probably somewhere resistance around this $2,000 range. Okay, so that would be a 50% downside. And the potential upside for Ether in that case is anywhere from twice the $4,000 price, about $8,000. Okay, all the way up to maybe 10x the price, maybe like $40,000 if we have some crazy blow off top, which I'm not saying is going to happen, but that's the potential range. So you're talking about a 50% downside risk and a potentially a 10x upside risk. That's a pretty good risk reward scenario in my opinion, which is why I decided to do it. Okay, again, not financial advice for you. I'm not telling you to do this because you might do it if the price goes down, like you might panic sell. There's lots of reasons why I'm not telling you to do this, right? But anyways, that's kind of how I'm seeing things. I don't think that we're going into a multi-year bear market, okay? But we might see some sort of, we could see things, get a little bit bearish for a while or just choppy for a while. It happens. I mean, just check this out. I mean, look, sometimes we have something that lasts for about a month that's kind of bearish and everybody thinks it's over and then it resumes this uptrend, okay? Crypto is not just this easy straight line up to these massive price targets that everyone thinks it can happen, So we see these trends upward and they have boom and bust along the way, but generally the trend is still upward and it's still parabolic. Okay. So a couple other things I want to look at, other people's perspectives. Those are just my perspectives, but, I think ETH is really strong in this case. Couple of just perspectives that I've seen floating around Twitter, which I think are pretty good, that help, reinforce kind of what I'm saying here. Some people say, that's just confirmation bias. You're just cherry picking what you want to see. But I think there's a lot to it, which is this. So this is from Will, as a chain analyst. He had a lot of great perspectives. So we have we've talked about this for a while, but I really think that there's a good chance 4-year cycles are over. Why? The type of market participants we now have. So we could very well see rounded tops and bottoms from now on. And validation would be having a blow off top, would then expect a prolonged bear. Okay, so this is a lot of what I've been saying. So first of all, some people are just looking at, the current crypto markets and trying to just copy and paste the past onto the present and the future, okay? And it doesn't always work that way, okay? Sometimes it does, sometimes it doesn't. There's lots of reasons to think that, like, what we're seeing right now is not just going to mirror what happened in 2017, 2018, in the sense of we're locked into this, like, 4-year cycle thing that's, like, perfectly programmed by the Bitcoin halving and all that. It's like the market's just way different now than it was back then, okay? And that's not even necessarily how the market worked back then. That's just an convenient explanation for how the market worked back then. It might be true, but we don't know for sure, okay? So you can't just like take that and apply it to what we have now. And so you have to think about like fundamentally, what are the reasons that cause the prices to go up? Well, it's exactly what I was saying before, adoption. And that adoption is not slowing down anytime soon. Okay, so that's a good reason to think that we're out of the 4-year cycle type of thing. Now, that doesn't necessarily mean that we're out of any type of cycles. We could just be in a longer cycle, okay? But if we're in a longer cycle or we're in a super cycle where it's like years of, generally speaking, up only, but maybe it has these sort of rounded tops and bottoms, this undulation over that amount of time, we could see, big volatility swings like that. But the last thing is, and this is what I've been saying a bunch of these live streams, if you've been paying attention, which is basically, I sort of fall in that category thinking we're in a lengthened cycle or a super cycle. But the biggest thing that would invalidate that for me would be seeing a parabolic blow off top, which would be like the Bitcoin price or the Ether price doubling or tripling in a really short amount of time. Okay. And that's exactly what he's saying right here, because what tends to happen in those cases is crypto is very reflexive. If something goes up really fast, tends to go down really fast. And when it goes down really fast by a lot, that means things typically cool off for a long time. So let me know what y'all think down in the comment section below. So another tweet from Will here. So I think we need to get rid of this binary concept of traditional Bitcoin bull bear markets. Too many people trying to project the past onto the future instead of imagining what the future looks like. Yeah, I think it's pretty good. And then also, this is from Ben over at Into the Cryptoverse. Great YouTube channel. Definitely go follow him if you're not already. But as I've said since 2019, the only 4-year cycle for Bitcoin was the last one. It makes absolutely no sense to assume that Bitcoin will repeat itself exactly every 4 years. I think that's spot on. So let's see here. Somebody says speed of information seems to shorten cycles. Yeah, maybe. So I think crypto is in a bubble. Total value of all Bitcoin is about 5% of all USD. Yet transaction counts are down from the peak in 2017. So no, I don't think that overall crypto is in a massive bubble. Relative to what other asset classes are. I mean, crypto is a $2.5 trillion asset, roughly speaking. It can get way, 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 way bigger than that. It could become a $200 trillion asset class. I'm not saying that's going to happen next year, but it can. All right, so a couple other things I want to look at here. Let's see here. I mean, it's so funny. Like I just pull up any like crypto news website. I'm talking about adoption, just scanning headlines here. And it's like, hold on a second, Lyft executive joins an FT marketplace, raising $200 million, raising $35 million. It's like, you just see this stuff all the time. Like more raises, more smart people coming in the space. It's like the adoption is just, it's crazy. It's absolutely crazy. Okay, so something else I saw, a graph come out this weekend that is another indication of adoption is what's happening in the Ethereum layer 2 space, okay? So the usage for ZK Sync, the Ethereum layer 2 scaling solution, based on zero knowledge rollups is going crazy, all right? The overall and the unique addresses is just on this big parabola upward, okay? So let's talk about this. Basically, so what is it? So I think that zero knowledge rollups are going to be a pretty big trend soon. All right. So why is this? It already is, like we're seeing the parabola there on the graph, but something else that people are going to probably cause a lot more froth around that particular trend. Why? So, okay. If you've watched this channel a lot, you kind of heard my spiel about what is a layer 2, but there's lots of brand new people here, so I'll just repeat this. And even if you've heard this a million times, it's always good to reinforce what you've heard. So basically, what is a layer 2? So basically, Ethereum, one of the biggest complaints about Ethereum is it's too slow, it's too expensive to use. Everybody thinks that we have to wait for Ethereum 2.0 to ship before that problem gets better, which might be sometime in 2022. It's way too far away. So the good news is you can fix that problem now with layer 2 scaling solutions. And ETH 2.0 is not actually going to fix Ethereum's gas fee problem. It's not going to fix all the scaling issues. Okay, that's what layer 2s are for. That's been the grand vision for Ethereum for a long time. It's part of what's called the modular blockchain design, which basically is you build blockchain infrastructure in layers. All right. So layer 2s are this environment where you can take all these extra, a lot of your activity and perform it in this environment, like doing trades on Uniswap, sending Ether around, buying and trading NFTs, and then all that activity kind of gets, computed there, and then the eventual result gets stored back on the blockchain itself. It gets rolled up and batched up, okay? That's how many layer 2s work, all right? And that makes the transactions way faster and way cheaper. We have lots of different layer 2s out there that broadly fall into two main categories, which are optimistic rollups and zero knowledge rollups, ZK rollups, okay? There's more, but those are the two, it's kind of the most popular ones, which basically, and the cool thing about these is many of these, solutions like Arbitrum Optimism, those are optimistic rollups, or like ZK Sync is zero knowledge rollups. Many of them are EVM compatible, which basically means the apps that run on Ethereum now, or the Ethereum virtual machine, can basically be ported over to these environments with hardly any changes. And so that means there's basically zero friction for developers launching their app and putting it on these platforms. You have to rewrite it, okay? Which means the ecosystems can flourish a lot faster. And on top of that, there's a high chance that some of these ecosystems are going to have token incentives, which basically means like to entice users to get into these layer 2s and start using them. They could basically earn token rewards from doing that, either through applications that exist on the app, on the layer 2s themselves, issuing tokens. So if you're trading on a DEX, maybe you're getting rewards. Maybe you're providing liquidity and getting rewards there, like extra rewards. Or maybe the layer 2s themselves at some point actually, issuing tokens that you could get a retroactive reward for being an early adopter. This is a pretty common thing in crypto, or especially in the Ethereum world, where basically, you see these airdrops happening where early adopters are rewarded, like we saw with Uniswap. Many people got like $10,000 plus for just using Uniswap before they released their token. It just happened recently with the Ethereum name service, or ENS. Lots of people got $10,000 or more just for using those applications. Same thing with, the list goes on and on, okay? So it would not surprise me if we saw some of those types of incentives roll out with layer 2s. Now, let's talk about the optimistic rollups versus the zero knowledge rollups, because there's a big difference here. So optimistic rollups, which basically is Optimism and Arbitrum are two of the main players. There's more, but I just focus on those because they're at the top of the list here. They basically work differently from ZK rollups. So one of the drawbacks of optimistic rollups is that it takes time to, because of how the layer 2 is designed, there's a certain amount of trust associated with the design. That's why it's called optimistic. So you have a withdrawal delay. So basically, you have to wait several days. Sometimes it's about 7 days to withdraw your funds off the layer 2 before you can guarantee that was a valid transaction and included. All right. So there are ways to circumvent that. You can do it with like hot protocol. You can do other things that sort of speed that up. But there's additional trust assumptions. Like you have to trust more things about the design. Now, what's cool about zero knowledge rollups, one big benefit of it is, you have to. There's less trust assumptions and there's more validation based upon cryptography. In the actual scaling solutions, where it's just way faster to get on and off of those protocols, okay? And so that's the cool thing about ZK rollups, and particularly with ZK Sync, things have gotten a lot better because they're starting to have their Ethereum compiler, or their Solidity compiler, excuse me. It's because before, one of the big drawbacks of ZK rollups was many of them did not support a compilation for Solidity smart contracts, so you had to like either use a different programming language or you couldn't just point and click move your app over, but you could do that with ZK Sync's Solidity compiler. So those are some big benefits there. And so one of the reasons I think that zero knowledge rollups could have a big trend soon is for all these benefits that I'm talking about. Many view this as a superior layer 2 scaling paradigm for the long term. We'll have to wait and see. It's not always the best technology that wins in the long run, but it's a high likelihood that that's going to be a prevailing paradigm. Okay, so lots of people looking out for that. Lots of people are watching these ecosystems flourish and grow really fast. And then if you add token incentives on top of that, that's a recipe for, pretty violent wildfire. I'll put it that way. Somebody says, hello, crypto is going to explode up next year. They will double or triple in value, and Austria crypto ETS will be world changers. Yeah, maybe. I think it's very possible that we see, like a Bitcoin spot approval within the next 6 months to a year, possibly an Ethereum ETF. That's not a guarantee, but if those things happen, I think it'd be really good for the crypto markets. Somebody says fruit rollups the most popular. Yeah, we need a scaling solution called fruit rollups. Somebody says Vitalik's new roadmap is interesting. So I did see that come out this morning. Let me see if I can. I was not able to load it actually, because I think like when I tried to load the website, it was, it just was overloaded. I think it might still be overloaded. Let me just see here. Okay, so here it is, Vitalik's blog. So Endgame. I haven't read this yet. Like I said, I saw it come out this morning. I tried to look at it, and it just wouldn't load. I think every time he publishes a post, his site gets overloaded. So we can try to take a look at it really quickly, though. See, consider the average blockchain, very high block frequency, but also highly centralized. Basically, what he's saying is, so basically, this is an average big blockchain is something that is monolithic blockchain that basically lets a lot of data into every block, which one of the big consequences of that is the state gets really, really big, hard for normal people to use. Yeah, I'll have to go through this more, but he's basically talking about the solution to having exactly what I was just talking about, which is multiple layers, and how this is the future. So that's kind of what my quick scan is. What does this mean for big blockchains? There's a path for them to turn something trustless and censorship resistant. We'll soon find out if their core developers and communities actually value censorship resistance. So he's talking about other ecosystems and what they're going to do. Yeah, I'll have to read it more. Somebody says crypto will follow the stock market. It will be bad. Yeah, I mean, I don't think that we've reached the point of completely decoupling from the stock market. Although if we look at the S&P, we've got some green. Somebody says OpenSea possible IPO. Yeah, it's possible. I could also see them releasing a token. Maybe. I don't have any insider information on that. That's just a guess. If they have an IPO, could they still do a token? I don't see why they couldn't. I wonder how much the order would matter in that case. Seems like that could cause some you know. It depends on what the token's for. Because like if it's to have a DAO, like how are you going to have shareholders and like what do you do in a situation where you have shareholders and a DAO? And what are your shareholders going to think if you're creating this new like entity that has influence over the product, and also vice versa? ETH gas fees are insane. That is correct. You are correct. But go check out the section before. I was talking about layer 2s. That's what fixes this problem. But also, ETH gas fees being insane are not bearish for Ethereum. It prices out a lot of newcomers from using the blockchain itself and people who've been around for a while. But it's not the final state. It's not the final form. And also, gas fees are an indication of demand. So, you know, gas fees are influenced by two major factors. One is the gas price. So the gas price is a reflection of the current demand to make transactions on the blockchain. So when the gas price goes up, that basically means more people are trying to get into the mempool at the same time, which means the gas price goes up. So that's demand. It's like saying, you know, oh, you know, New York City's too busy, like too expensive. Nobody wants to live there. Well, it's busy and expensive because people want to live there. So the other big factor that affects the transaction fee is the price of the cryptocurrency itself, which is also demand for that asset. So you have demand for the asset plus demand to use the network. That's what, you know, gets multiplied together to make the transaction fees so high. Yeah, it says prices are high on Porsches, but they sell every one. That's right. Yeah, it's like saying Porsches are too expensive. Nobody's ever going to buy one. Crypto is a lesson in economics in more ways than one. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It helps this videos out so the more people can learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time.